Hi, today is Monday the 16th, and this is a short weekly recap for our current positions. And we start with the December trade. December trade is doing, well, about okay, really. Minus 450, very broad range, 2975 to 3900. And now it's a matter of raising the UEL in the next 2 to 3 weeks. Last week, I basically reshaped a trade that was definitely overhedged. So maybe more transactions than usual of this trade. If we look from the 9th, I closed the very conservative balance fly, and then I started rolling the call spreads because we had that Pfizer spike. So that was a bit of a loss here, but that's because of the IV inversion in the 3800s. And then I started and then I did something fairly unusual, which is a rollover in one combo, basically rolling the position up. And that's something that is generally not recommended and certainly not near the money, but it's still volatility way out far OTM. So this is something that we could do at a fairly good price. And then I'll roll the gold credit spread again, which I paid with a PCS. So I could roll again if I wanted to. Last week on this Rhino Slack, I mentioned that we had the IV inversion in the 3800 low, high 3700s, 3800. So it's better to keep our CCS on that side. And if the market keeps grinding up, we will have, of course, this curve shifting leftward, and it will probably put our CCS in a dangerous position again. So this is something I want to avoid. So this is why I may have to roll again. That will not cost much, but just to be on the safe side, I may just roll the CCS again. At this point, it would cost us about 20, so $40 each, and I will probably either go for another PCS. The PCS, we can still make money on PCSs here, even just this one would suffice, But now, do we want to weaken the downside further? Maybe not. So I think at this point, what I would do is probably going for a more balanced adjustment like this. And here, basically, this adjustment would cost us nothing. So now it's a matter of assessing the risk on the upside, because of course, if I just go for delta flattening on the put side, it would probably be better to slowly bringing our UEL back to zero. So this is maybe something I would do. The CCS roll remains optional. Let's not forget that the trough in the IV curve will slowly shift towards ATM. So it should be soon a lower risk, assuming of course the market doesn't shoot up. We've had a Pfizer spike, which cost us some money last week because, as you can see, I monitor the IV inversion and I generally go gradually. Unfortunately, last Monday we had to do it very abruptly because it was a very sudden move. I'd rather do that step by step. Now, if we look at where the market is heading today, market has broken. I invite you to watch the SPX Outlook. I mentioned it could be a breakout, and it seems the market is bumping now on a 3620 area. And it could go all the way to 3671, which incidentally is a recent high. We also noticed the narrowing of the range, which generally indicates a breakout within a day or two. Right, so now let's move back to this one and quickly look at the January trade. January trade is basically a missed takeoff. This is a trade that I started way too conservatively, and now I may keep this as a hedge. I may gradually bring it back to zero here. That's something I would do just to forget about it and then start placing a more ATM trade. If I place a more ATM trade, although volatility is not very enticing, I would probably go now the volatility is lower, go for a 100/75, and let's say what it would do here. Let's first get rid of adjustment. Let's say how much it would cost. It looks like it's a small credit. So I would probably go for delta that is slightly negative. Yeah, I mean, maybe something like this. So maybe two of them and start reducing the hedge side just to, of course, if I change anything here, it will lose its hedge effect. So if I do anything like a PCS roll, okay, this is something either on the upside or on the shorts. We increased a little bit. We of course add some capital, but that comes from these two broken butterfly here. This is still a very safe trade. Now, if I see that the market is peaking, and I would then maybe look at selling a CCS just to add a little bit of theta to the trade, something like this. So I think I will go safe on this trade. The missed takeoff is not really important. I could even close a position and start with a minor loss. That doesn't really bother me. What bothers me is the volatility being much lower, so the entry point is not as exciting as it used to be. That being said, well, this was a very high volatility and backwardation, so the market conditions were actually pretty good. And as a matter of fact, if I thought I would on 770 TE before the elections, the decrease in volatility would have made this trade a superb takeoff. So now I've got to deal with what it is now. Okay, that is it for now. Again, I invite you to join the Slack group where I send screenshots on once or twice a day. Thank you for watching and bye.